Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking crude oil futures. The seesaw continues in crude oil for the last few days. We are up today, although we did pull back a little bit. You're up above that 47.50 area, up about a 0.5%. And that seesaw continues. We saw a huge rally on Friday, gave back about 75–80% of that rally yesterday, and then today started off fairly strong and has pulled back a little bit as we got in toward the end of the day. Now, one of the main things that pushed us on Friday and continue to keep sort of a bullish sentiment going, at least in the very, very short term, are rig counts. Rig counts on Friday for crude oil were down 5. Now, if you look over the last 6 weeks, and I've talked about this before, we're flat on crude oil rigs. We were up 2, down 1, up 2, down 1, up 3, down 5. That is 7 versus 7, that is flat. And rig counts being a contextual piece of data, if it flattens out, as we start to get a little bit more pressure on price, that's not necessarily a good thing. That probably is going to lend to the bullish story. Something else that's lending to the bullish story in the short term is the Wall Street Journal. The Wall Street Journal put out a report this morning that talked about U.S. drillers actually moving more toward traditional rigs and away from fracking, away from what they call shale. Now, part of it has to do with this idea that the ratio between oil and gas coming out of these wells or these geological surveys is higher to gas than it is to oil. Now, the geological studies have been a point of contention for a long time, but at the end of the day, American drillers have a limited amount of capital to expend on rigs. And if they're expending that on traditional rigs, those are slower to develop. They don't necessarily have a big push of supply, as we see with shale rigs. Shale rigs tend to burst out with a lot of oil and then kind of taper off, what they call legacy production declines. If you're seeing that in the context of flat to lower rig counts in total, you're going to see a dip in U.S. supplies. Last couple of months, not showing up. Up 113,000 barrels last month, 117,000 barrels this month in U.S. production. But again, if this were to be the new trend, you could see this bullish sentiment, the short-term bullish sentiment, turn into a long-term bullish sentiment. As of right now, crude oil still not broken out to the upside, still in a larger, longer-term macro down channel. This is Bob Iaccino talking crude oil futures on the CME Group trading floor in Chicago.